Good morning, everyone. Thanks for tuning in. Let's talk. Welcome to the 11th episode. I'm your host, Elena Lau, real estate broker and CEO of Union Real Estate. Today, what we're gonna do is to give you an update of the Greater Boston housing market. And today we have our featured guest speaker, Chris Chen with NYC Advisory. Welcome, Chris.
Thank you, Elena. Thank you so much.
Yeah, so he and I will be talking about the long-term care. So if you are tuning in, feel free to chime in with your question through the Facebook chat. So let's just jump right into the numbers. So for this past week of July, we have been seeing about a increase on the showings. What you see is like compared to last weekend, during the holiday weekend, we saw a decrease, and that's because of the holiday, but it went bounce back and then is staying stable. What you see comparing to 2019 is that we are having a lot more showings. So let's dive into the single family market for week 3 in July. The numbers of homes sold were 276, which comes with a decrease compared to last year, about 23%, with an average day on the market of about 37 days. In terms of pricing, we're seeing an increase of about $875,000. The increase from last year we're seeing is about 9%. What you see here on this graph is the number of sales pending week after week. So what we're seeing from last week is about an average of 10% decrease on the number of sales pending. And then what I believe that attribute is because of the shortage of inventory that keep decreasing. So that's why we're seeing a decrease on the numbers of sales pending. In terms of condominium, we had 189 condos sold last week, which is a decrease of about 22% compared to last year, with an average days on the market about 46 days and an average price of $682,000, a decrease of about 4% compared to last year. In terms of the number of sales pending, we're seeing the same effect compared to the single family, which we also see a decrease or a drop of 10%. So this wrap up the update of for this past week. What I'm gonna say as a wrap up is that we're continuing to see a shortage on inventory, multiple offer situation, and despite that what we're going through the pandemic, where the market continues to be really hot. So with the recent news that the school system is gonna be delayed for 10 days, I think this will give some more time for homeowners that need to move before the school systems reopen. So I think we're hopefully gonna see some more movement in the upcoming weeks. Well, so right now I'm gonna introduce Chris Chen, a financial professional at NYC Advisory. He's also a advocate for financial literacy, and he received a bachelor of science degree in accounting from CUNY Hunter College, and he's also Area Brooklyn Borough Director. Welcome, Chris.
All right. Thank you, Elena. Thank you so much. It's great to be back.
I know, welcome back.
Yes. Thank you. Thank you for inviting me again. So today, our topic is going to be long-term care. So I'm just going to share my slide. And long-term care is one of the most overlooked retirement planning in everyone's financial plan. So let's kind of talk about what is long-term care. So a lot of times what we do is we just have this mental picture in our head that long-term care is just for the elderly, and you just get a picture of people walking around with canes and in wheelchair. It's actually it's not that case. Not all the cases are. So long-term care, it's a range of services and supports you may need to meet your personal care needs, meaning it's not medical care, but it's rather assistance with the basic personal tasks that you need every day. This is what we call the activities of daily living. So meaning you don't have to be sick or ill as long as you cannot do 6 of the daily activities like bathing, dressing, using the toilet, transferring, meaning moving around, and then also caring for incontinence, and then eating. So, so with the long-term care, we need to understand that right now it used to be the statistics were it used to be 1 out of 2 people will need some sort of long-term care when they are actually older, but now the statistics has risen that 7 out of 10 people will need some sort of long-term care down the road. So, and it's just a high number that we don't even pay attention to. So if you just look around the room, out of 10 people, 7's gonna need some help with all these 6 daily activities at least. So, so how much is long-term care, right? I always kind of wonder, and then a lot of my clients also wonder. So, so last month we were able to show some numbers for a actually someone from Massachusetts. So I wanna kind of explain to you, why do we need a plan? Because the long-term care is super expensive. So these numbers are the kind of like the national average. If you need home health care, if you need assisted living, or if you need a nursing home. And let's take a look at some of the numbers for 2019, especially in the Boston area of Massachusetts. So if someone needs like the homemaker services, meaning someone come in and clean your house, maybe prepare some meals, that can be an average of $65,000 a year, and the number has grew 5.56%. But if you also need home health aid, meaning someone coming into your house and staying for like a good duration of the day, whether it's 4 hours, 8 hours, some even require 24 hours. So those are the folks that will do more of the extensive services, meaning it can help you do cooking, bathing, take you to the doctors. That's close to the same amount, 65,720. So that has increased to 2.68%. But what happens if they need to hang out at the adult day healthcare? That's also about $19,000 a year. But if they also need to live in assisted living facility, maybe like a senior home, right? Not a nursing home, but maybe like a senior home that is with just seniors, is about $77,000. And then if they need to be in a nursing home, this is going to be super expensive. If you need a semi-private room, it's about $151,000. A private room is going to cost you $162,000, right? So, so one is you got to think about retirement planning. If you trigger long-term care, you cannot take care of yourself. You're going to need someone to take care of you. So if you don't have any family members around, you got to hire care. So if we project 20 years down the line, so if you are about 40, 45 years old, and you might retire about 65, that's our number that we wish for. But I think the retirement age is going to be further out because of our life expectancy. So if you look at the 20-year projection, it's close to be double. Are we prepared, right? Are we ready for this? So what I explain to a lot of the clients is, what are our options out there to prepare this big overlooked retirement planning? So traditionally, folks were buying the traditional long-term insurance. So this type of insurance is the most expensive. It's either you use it or you lose it, right? That's it. So if you don't trigger long-term care, that money that you pay every year is gone. It's like car insurance. So the second option is where they use a life insurance with a true long-term care rider that you can access the face amount if you do trigger long-term care. And then the third option is the health savings plan. So the health savings account, a portion of that contribution can be used to pay for your long-term care coverage. So that have to see what is your threshold depending on the age, right? And then the fourth option is they can actually utilize their retirement fund, go into a annuity and use the annuity income and pay for their long-term care coverage. So these are some of the various different long-term care options that we have out there. Okay. And
Okay.
yeah,
So I got a question.
sure.
So when should we prepare for long-term care? Is there like a specific age that we should be starting to purchase this type of insurance?
So with the when is the best time for us to have this coverage is, for me, my rule of thumb is I always recommend clients that are at least 40 years old and older to make sure that they have some sort of a plan, because the older you get, the more expensive it's going to be. But some of the options here is actually a fraction of it. And there's another option where there is a full return on premium if you actually decide to say, hey, I'm going to get a plan 2 years down the road, 5 years down the road, or even 10 years down the road. You can still cancel and get your full return on premium. But if you think that, hey, we have a historically our health, our family health is not that great, you can still get it a little bit earlier, before 40 years old. So a lot of times I'll talk to most of my clients to kind of get them where, okay, family history, you might want to get it earlier just to have a peace of mind.
So my understanding is that when you purchase life insurance, there may be a health or doctor checkup. With
Yes.
LTC, is that checkup required or part of the process?
Well, if they are buying a brand new life insurance with a long-term care rider, they will provide a paramedical for you. But if their existing policy have an option to add a long-term care rider, they will do another checkup again. And then some of the carriers right now is because what's going on with this pandemic, some carriers don't allow clients to apply for the long-term care rider if they are over the age of 55. It's because of the mortality rate that's going on right now because of the pandemic. So I encourage everyone, if you are less than 55 years old, healthy, get it as soon as possible.
Okay.
Yep.
So say that you have a new client and then comes to you, will you present the LTC as part of the retirement planning?
Yes, absolutely. Absolutely. Because that's one of the, for me, is I always recommend that, because if they don't do that and they triggered it, and our primary goal is to really help them to protect their assets. It's also protect their assets and preserve to the next generation, because sometimes if they don't have any plan, they have to do like a what we call a reverse mortgage, meaning taking out a loan, and then whether it's the bank or the agency that they're borrowing the money from, that agency is going to take the equity amount of what they want to borrow, right? So reverse mortgage, a lot of people, it's only for age 62 and over that can do a reverse mortgage, and we don't want them to lose their house just to have care. And if they don't do that, they will have someone from the family that's going to quit their job to be able to care for them. So usually out of the 4 caregivers, the 3 are female. It's a daughter, maybe a daughter-in-law. Yeah.
I see.
Yeah.
So help me understand in the audience, like for those retired individuals, they come with may come with Medicare, Medicaid. Is that like so I understand that those are health planning, right?
Yes.
But do those plans come in or include some type of long-term care benefits? Or should
No,
we have
yeah.
to add that as an additional to have the long-term care?
Yeah, that's separate, right? So when we retire at the age of 65, what we have is that Medicare, right? So Medicare, so it depends on the income that they're also getting from the government, right? Their Social Security income. That base amount is already taken out even before you get your check. So if they don't, so usually Medicare covers about up to 80%. They usually have another, it's called a Medicare Advantage plan added on top of that just to cover the medical. We're not even talking about long-term care yet. And then the Medicaid is for people that are either they don't have a lot of assets, they don't have a lot of money. That's more on the need base. They have Medicaid. So Medicaid, they have certain benefits, but it's still so it depends on state per state. I know in New York, what they do is if they do qualify for Medicaid, they can actually get home aid, a home aid that can assist. But that means that they don't have much assets to their name, right? If they have assets, they don't qualify. Yeah.
Okay, that's good to know. So we have a question from our audience. This is from Abby. Her question is, what happens to assignments of life insurance to lenders if it is a reverse mortgage?
Well, that's two things in that question. So meaning a life insurance is separate from a reverse mortgage, right? So, the life insurance, if you do an assignment, meaning you can assign the life insurance like it's like a collateral, because they know that they know there's a face amount. They also know that if there's cash value, they can actually sometimes certain funeral homes, what they do is they'll take that as a collateral. You can assign it to the funeral home before you even get your death benefit check. The second thing is the reverse mortgage is something separate, is meaning the client might have a home and the home is fully paid off, but they don't have any cash in the bank. And if they need some sort of long-term care, they can do a reverse mortgage, take equity out, meaning take a loan, and then they use that money to pay for the long-term care coverage. So the reverse mortgage, they don't have to pay monthly back. Let's just say something happens to them, whoever it is will just take the equity of the amount. But you can also pay back your reverse mortgage loan as well.
Okay, thank you, Chris. There's another question from an audience. Martin Yao is asking if what are the tax implications of acquiring a long-term plan, and are there any tax benefits?
Great question, Martin. So with the long-term care, if it's especially if it's in a long-term care rider inside a life insurance, it has the tax benefit. So depending on the carrier, so some carriers don't require you to provide any receipts, right? It's called an indemnity, where if you trigger it, you can get, depending on the carrier and the policy, you can get either 2% of the face amount or 4% of the face amount, and you can get that money tax-free and use it any way you want. So great question, Martin.
All right. What other things we should be knowing about the long-term care that you want to share to our audience?
I encourage everyone, because with the long-term care, there was a study that's done by MIT Age Lab. It's called 8,000 days. So a lot of times is from midlife crisis to our retirement age is 8,000 days. And then from our retirement to life expectancy, we have another 8,000 days. So that is equivalent to about 21.9 years. So we're going to live a long time. So we want to make sure that we live comfortably, is always be proactive in having some plan. And if you have some plan, also try to review it annually with a professional that have your best interest in mind.
Thank you, Chris. I don't see any other question in the audience. So any final thoughts, Chris?
My final thought is health is the most important, and also wealth. So there's two words that I really go about is health and wealth. Make sure that we are protected. Make sure that we protect ourselves and help our family, so we all can prosper down the road. So.
Well, you said it very right. Health is very important.
Yeah.
All right. Well, thank you so much, Chris, for all the knowledge that you have shared with us today and in past episode. I look forward to continuing the conversation with you.
Thank you, Elena. Thank you so much for having me back. Thank you.
Of course. So, well, if you guys want to get more information about long-term care or other financial planning, feel free to reach out to Chris or myself. My contact information is here on the screen. I want to really thank you for your support on all these episodes and different programs and topics that we have brought to you week after week. So we are going to take a break for the month of August. So we're going to come back sometime in September. So stay tuned for more information about the upcoming programs. Thank you so much.